GameFi explained, everything you need to understand. GameFi, short for game finance, has rapidly evolved from a niche experiment into one of the most transformative sectors in the Web3 ecosystem. In its simplest form, GameFi merges the worlds of gaming and decentralized finance, DeFi, creating play-to-earn, P2E, economies where users can earn real-world value through in-game activities. But GameFi is much more than just earning tokens for playing games. It's about reimagining how digital economies work, how value is created and distributed, and how players and developers interact in a decentralized digital future. Before we begin, an important message: crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. The core idea behind GameFi is simple: players should be rewarded for the time, skill, and resources they contribute to virtual worlds. In traditional gaming, players spend countless hours grinding, leveling up characters, and acquiring digital assets, yet they never truly own anything. All progress, all items, and all currencies remain locked within the game's closed ecosystem, governed entirely by the game developers. GameFi challenges this model by placing ownership in the hands of the players through blockchain-based assets like NFTs and native game tokens. In a GameFi ecosystem, assets are not just pixels on a screen, they're real, tradable, and often interoperable. Weapons, characters, land, and even guilds can be minted as NFTs, stored in wallets, and sold or transferred on open marketplaces. In-game currencies are often built as ERC20 tokens, governed by smart contracts and integrated into broader DeFi systems. The result is a gaming experience where time spent equals value earned, and where players can turn virtual accomplishments into tangible income streams. GameFi projects began gaining traction around 2020 to 2021 with titles like Axie Infinity, which allowed players to breed and battle NFT creatures while earning tokens. During the 2021 bull run, Axie exploded in popularity, especially in developing countries where the earnings from playing were sometimes higher than minimum wage jobs. But this initial wave also exposed the weaknesses of unsustainable tokenomics. Many P2E models were based on inflationary rewards and unsustainable growth assumptions, leading to crashes in both player retention and token value. The first generation of GameFi served as both a proof of concept and a cautionary tale. It proved that blockchain-based games could attract millions of users, generate billions in token volume, and kickstart real-world economies. But it also revealed how critical it is to balance gameplay enjoyment with sustainable economic models. A game that exists only to pay users eventually collapses under its own weight. True GameFi success lies in creating games that people want to play, not just for profit, but for fun, while layering in financial opportunities that feel organic and rewarding. This realization has led to what many now call GameFi 2.0, a new era focused on gameplay-first experiences, stronger tokenomics, and long-term ecosystem design. Projects like Illuvium, Big Time, Shrapnel, and Guild of Guardians are building expansive game worlds powered by Unreal Engine, featuring high-fidelity visuals and complex storylines. Rather than relying solely on earn mechanics, these titles emphasize rich player experiences where rewards are earned through skill, progression, and contribution to the community. Underlying this shift is a broader move toward digital ownership. At the heart of GameFi is the belief that players should own their assets, and that those assets should be usable beyond a single game. Interoperability between games, platforms, and metaverses is a key goal. Imagine using a rare sword you earned in one game as your status symbol or weapon in another. Or imagine land you own in a fantasy MMO giving you access to early governance rights in a sci-fi themed world. GameFi is laying the foundation for an open gaming metaverse, one where your identity, achievements, and inventory follow you across the ecosystem. One of the most fascinating dynamics in GameFi is the role of guilds. These are decentralized communities or organizations that invest in in-game assets and lease them to players, typically in exchange for a share of the rewards. In the early days of GameFi, Guilds like Yield Guild Games (YGG) rose to prominence by enabling thousands of players to earn income through scholarship models. A guild would buy expensive NFT assets, like rare characters or tools, and lend them to scholars in emerging markets. This created a form of digital labor economy where players without capital could participate in earning opportunities. As GameFi has matured, guilds have also evolved. Some now act more like venture DAOs, investing in promising GameFi projects and helping to bootstrap liquidity and communities. Others are developing their own game portals, offering a multi-game experience where rewards and reputation accumulate across titles. These guilds aren't just game players, they're infrastructure builders, governance participants, and liquidity providers. In this way, GameFi blurs the lines between gaming, finance, and social coordination, making it one of the most interdisciplinary sectors in Web3. Another crucial piece of the puzzle is the integration of DeFi mechanics into GameFi economies. In many GameFi ecosystems, players can stake tokens, provide liquidity, or farm rewards just as they would in a DeFi protocol. Some games feature internal marketplaces where players can lend or rent assets to others. Others include yield-bearing items or in-game tokens that can be deposited into DAOs for governance votes or future airdrops. The convergence of DeFi and gaming is what gives GameFi its unique flavor. It's not just play to earn, it's play to finance. This convergence of DeFi and gaming has given rise to innovative mechanics that push the boundaries of what's possible in virtual economies. For example, some GameFi platforms allow players to stake NFTs to earn yield, with rewards based on how those NFTs perform in the game world. A player might stake a warrior character NFT, and its earnings increase as the character wins battles or achieves milestones. Others introduce dual token systems, where one token serves as the utility or in-game currency, while another acts as a governance or store of value asset, helping to balance inflationary pressures. GameFi also thrives on community governance. Many games are built as DAOs, decentralized autonomous organizations, allowing players to vote on updates, in-game economics, and even new features or storylines. Token holders might decide how loot is distributed, what new quests are introduced, or how emissions schedules are updated. This creates a sense of ownership and agency among players, far beyond what's possible in traditional gaming studios. Instead of being passive consumers, players become co-creators of the worlds they inhabit. The technological infrastructure powering GameFi is also evolving rapidly. Layer 2 solutions like Immutable X, Arbitrum, and Polygon are providing the scalability needed to support millions of microtransactions without gas fees. Game engines like Unity and Unreal Engine are now integrating Web3 toolkits that allow for seamless NFT minting, wallet logins, and on-chain logic. Meanwhile, cross-chain solutions are making it easier for GameFi projects to operate across multiple ecosystems, letting users bring assets from Solana into a Polygon game, or from Ethereum into Avalanche. One of the most significant breakthroughs in GameFi has been the introduction of dynamic NFTs. Unlike static NFTs, which represent fixed attributes or visuals, dynamic NFTs can evolve over time based on user actions, gameplay outcomes, or external data feeds. In a GameFi context, this means a character NFT could gain new skills, age, or change appearance as it levels up. A sword might become stronger the more it's used. This injects a sense of progression and uniqueness into digital ownership, making each asset feel personal and earned, not just bought. The social layer of GameFi is equally powerful. Many blockchain games are not just about individual performance but about forming communities, alliances, or clans. Discord servers become the beating heart of strategy discussions, item trading, and governance debates. GameFi players often spend as much time engaging with the community outside the game as they do playing it. This has led to the rise of social tokens, custom tokens for communities, streamers, or guilds that represent influence, reputation, or access to private areas or events within the ecosystem. Importantly, GameFi is also lowering the barrier to financial participation in crypto. For millions of users around the world, especially in the global south, Their first experience with crypto isn't through investing in Bitcoin or staking Ethereum, it's through playing a blockchain game. GameFi becomes their on-ramp to understanding wallets, NFTs, DeFi, DAOs, and the broader Web3 universe. It provides utility first, speculation second. And by doing so, it cultivates more engaged, educated, and active users in the crypto ecosystem. While the potential of GameFi is massive, it's not without challenges. One of the biggest is sustainability. Many early GameFi projects experienced rapid growth, only to collapse under token inflation or lack of ongoing player engagement. If rewards are the only reason people play, the model quickly turns into a Ponzi-like loop where early adopters cash out while newcomers bear the losses. To combat this, newer GameFi projects are focusing on more balanced tokenomics, including burn mechanisms, skill-based earning, capped emissions, and integrating off-chain revenue models to support on-chain rewards. Another issue is accessibility. Despite growing adoption, many GameFi projects still require a level of crypto literacy that's a barrier to mainstream gamers. Tasks like setting up a wallet, buying tokens, or signing smart contracts can be daunting to non-crypto natives. But this is starting to change with innovations like social logins, gasless transactions, fiat on-ramps, and custodial wallets. Platforms are also working to make onboarding more seamless, so players can jump into a game without having to learn about blockchain first. The goal is to let the tech fade into the background, and let the game shine. Security is also a concern. Because GameFi projects often involve valuable assets, they become attractive targets for hackers and scammers. Smart contract bugs, phishing attempts, and rug pulls have plagued the space. As a result, GameFi teams are increasingly investing in audits, bug bounties, and insurance protocols to protect user assets. Community education around safety, such as avoiding fake airdrops or using hardware wallets, is also becoming a crucial layer of defense. Regulation is another wildcard in the evolution of GameFi. As these platforms blend gaming, finance, and NFTs, they fall into a legal gray zone in many jurisdictions. Are in-game tokens securities? Do loot boxes count as gambling? Are players liable for income tax on rewards? These are questions that regulators are just beginning to address, and the answers will shape the future of the industry. Some GameFi projects are proactively working with legal teams to structure their ecosystems in compliance with emerging rules, while others are exploring decentralized governance to distribute liability and decision-making. Despite the uncertainties, big players are taking notice. Traditional game studios, such as Ubisoft, Square Enix, and Epic Games, have dipped their toes into blockchain gaming. Some are launching their own NFT platforms, others are partnering with Web3 native studios or listing blockchain games on their stores. While there's been pushback from traditional gamer communities, often skeptical of crypto monetization, there's growing recognition that the concept of digital ownership is here to stay. As tools improve and friction decreases, more legacy studios may embrace GameFi models, especially in regions where play-to-earn demand is strong. Meanwhile, investment in the GameFi space remains robust. Web3 venture funds, DAOs, and crowdfunding platforms are pouring capital into promising studios. Many GameFi startups are launching via token launches, NFT drops, or DAO raises rather than relying on traditional VC rounds. This democratizes access to early-stage gaming investments and allows communities to become early stakeholders in the games they'll eventually play. In a GameFi context, the players aren't just the audience, they're the funders, testers, marketers, and governors too. Another major area of innovation is the metaverse, and GameFi is one of its most practical applications. While the term metaverse can be vague or overused, GameFi projects are actively building interoperable, persistent digital worlds where users can play, earn, build, and socialize. Projects like the Sandbox and Decentraland offer user-owned land, customizable avatars, and economic systems tied to native tokens. These platforms act more like platforms than single games, enabling creators to launch mini-games, social hubs, virtual events, or branded experiences that plug into the broader economy. Some of these virtual worlds are even being used for education, concerts, and business meetings, blurring the lines between entertainment and utility. GameFi thus serves as a proving ground for how the metaverse might operate in the future. If these early experiments succeed, by solving for scalability, UX, and engagement, they could inform how we use the internet itself in the years to come. For now, they're sandbox environments, pun intended, where builders and users can test out new mechanics of interaction, ownership, and monetization. One of the most underappreciated aspects of GameFi is the potential for cross-border impact. In regions with limited access to banking, credit, or reliable income, GameFi becomes more than a game, it becomes a livelihood. The ability to earn tokens, trade assets, or join a DAO from a mobile device empowers users to participate in the global economy in ways previously unavailable. This democratization of economic opportunity is one of the most powerful narratives in Web3, and GameFi is right at the heart of it. It's where leisure meets labor, and entertainment meets empowerment. As the sector matures, a clearer distinction is forming between earn-focused and experience-focused GameFi models. The former prioritize rapid income generation, often attracting users with high yields and token incentives, but they tend to struggle with long-term engagement and retention. The latter prioritize immersive gameplay, lore-rich worlds, and competitive dynamics where rewards are secondary to the experience. Many investors and developers now believe the real winners in GameFi will be the latter, those that build great games first and layer crypto in to enhance, not replace, the experience. Narrative also plays a key role in the success of GameFi projects. Players want to feel part of something bigger, a story, a world, a cause. Successful GameFi projects like Star Atlas or Illuvium don't just offer gameplay loops, they offer lore, factions, missions, and a sense of progression that mirrors traditional AAA games. Blockchain elements become tools to deepen immersion, owning a rare ship or crafting a legendary weapon becomes a meaningful part of your story, not just a transaction. GameFi's best future lies in merging storytelling with economics. Another fast-rising trend is user-generated content, UGC. Some GameFi ecosystems enable players to design their own skins, quests, or levels, and mint them as NFTs to sell or share. Others allow players to mod the game world, host custom servers, or even launch their own sub-economies within the main game. This turns players into creators, and creators into entrepreneurs. In the same way YouTube turned viewers into video publishers, GameFi can turn gamers into game developers, with monetization built in from day one. Infrastructure for GameFi is also expanding rapidly, with entire ecosystems emerging to support development, asset management, analytics, and marketplaces. Platforms like Fractal, OpenSea, and Magic Eden offer dedicated GameFi sections for discovering, buying, and trading gaming NFTs. Wallets such as MetaMask, Sequence, and GameStop Wallet are integrating features specific to gamers, like game dashboards, asset previews, and fiat bridges. Meanwhile, analytics tools are emerging that let users track player performance, token velocity, and asset values across different games. These tools not only support players but also help developers make smarter design decisions. By analyzing token flow, user behavior, and retention curves, GameFi teams can fine-tune everything from quest difficulty to reward emissions. This data-driven approach mirrors traditional game development, but with the added complexity of open economies. In GameFi, everything is visible and tokenized. Success isn't just measured in downloads or reviews, but in volume traded, wallets connected, DAO, daily active users, and governance participation. Beyond entertainment, some GameFi projects are exploring serious applications like education, therapy, or cognitive training. Imagine a game that rewards you for learning coding or financial literacy. Or a VR-based therapy game that uses token incentives to encourage mindfulness or social interaction. These use cases may not dominate the headlines yet, but they hint at the long-term versatility of GameFi mechanics. The idea of earning while playing isn't just about money, it's about value. And value can be intellectual, emotional, or communal. Skeptics often argue that GameFi is a fad, that play-to-earn models are unsustainable, and that traditional gamers don't care about NFTs or tokens. And in some cases, they're right. Many early GameFi projects were rushed, poorly balanced, or purely speculative. But to write off the entire sector ignores the deep innovation and evolution happening beneath the surface. GameFi is still in its infancy, much like mobile gaming in the early 2010s or free-to-play before that. It's learning from its mistakes, and the next generation of projects is arriving with stronger fundamentals and better gameplay. The involvement of serious developers, top-tier designers, and experienced crypto teams is changing the narrative. No longer just garage-built games with clunky mechanics and token spam, GameFi is beginning to produce titles with AAA visuals, deep lore, and competitive depth. Many projects are also working with experienced economists to structure in-game economies that can withstand market volatility. This shift, from speculative novelty to polished experience, is where GameFi will begin to find mainstream traction. The global appetite for gaming is enormous. With over 3 billion gamers worldwide and an industry worth more than $200 billion, even a small slice of that market moving toward GameFi represents huge potential. What's more, younger generations already understand digital ownership, in-game currencies, and avatar customization. GameFi simply gives them more control and more upside. As attention spans shrink and creator monetization becomes more essential, GameFi offers a model where players aren't just customers, they're stakeholders. The economics of time and attention are shifting, and GameFi is perfectly positioned to take advantage. In a world where users expect to be compensated for their engagement, where content creators monetize fandom, and where audiences demand transparency and ownership, GameFi delivers on all fronts. It turns gaming into a participatory economy. Players aren't just logging in for escapism, they're contributing to an ecosystem, building reputations, earning value, and shaping the direction of digital worlds. What excites many investors and builders is the potential for composability in GameFi, the ability to connect various elements of different games and platforms into a cohesive experience. Imagine using your RPG sword in a completely different MMO. Or using your avatar identity and reputation across a racing game, a virtual concert, and a governance DAO. This kind of interoperability, made possible through blockchain standards and open economies, is fundamentally different from the siloed ecosystems of traditional gaming. GameFi also serves as a cultural bridge between crypto and the mainstream. Where GameFi can feel cold, abstract, or inaccessible, GameFi is warm, visual, and social. It introduces users to wallets, governance, staking, and tokenomics in a way that's intuitive and fun. In doing so, it acts as a gateway to Web3 adoption. Many people who would never otherwise explore decentralized finance, NFTs, or DAOs find themselves naturally engaging with these concepts through gameplay. As we look toward the future, GameFi stands at a crossroads, one filled with both promise and pressure. The sector must continue to mature, building games that stand on their own merits, while integrating crypto features in subtle, sustainable ways. It must earn the trust of players burned by rug pulls or unsustainable economies, while inviting in the billions of gamers yet to touch a blockchain. It must solve for user experience, regulatory clarity, and fair distribution of value, not just hype. But the upside is enormous. If GameFi succeeds, it could reshape the gaming industry in the same way free-to-play did, introducing a new business model, a new type of gamer, and a new kind of creator. It could also serve as the foundation for the next generation of the internet, where people work, play, socialize, and invest in open digital worlds that they truly own. In this sense, GameFi isn't just about games. It's about digital freedom. We're still early. The infrastructure is being laid. The developers are building. The players are coming. And the most transformative GameFi experiences haven't even launched yet. But they're coming, and when they do, they won't just change how we game. They'll change how we live, earn, and connect in the digital age. Subscribe to Crypto Pulse for deep dives, tutorials, and objective insights into crypto's biggest trends.